Unit 7. Listening.
I know many people think our system in Germany is complicated, but I see that in the UK you have retail banks and commercial banks. Some banks seem to be both. What's the difference between them? Can you explain?
Yes, it is very confusing. But basically, retail banks are the banks you see in the high street of every town. In fact, sometimes they are called high street banks. They offer the ordinary customer the full range of financial services, like your credit card, debit card, or customer accounts, plus, of course, mortgages and insurance. Commercial banks, by contrast, are focused on small or medium-sized businesses, and they offer many additional business services like leasing or factoring. Today, however, many of the retail banks, like RBS or Barclays, also offer commercial banking, so they provide both services. Is that clear?
Okay, so if I understand you, the same bank can be both a commercial and a retail bank. Is that right?
Yes, exactly.
Well, in that case, where do the investment banks belong? I thought they provided the commercial services to companies.
Well, in a sense, you are right. But investment banks really work on the financial markets, like the stock market. They offer specialist advice to big international companies on raising money in bonds or shares. But they also have large M&A departments, that is to say mergers and acquisitions, that help companies to buy or sell other companies. It's important to understand that investment banks don't lend money to customers or provide any of the other banking accounts that a company needs to manage its daily business. They make a lot of their money from fees by providing services to big companies.
Sorry, I didn't get that about fees. Could you go over it again?
Sure. The point I was trying to make was that investment banks don't actually lend money to companies. They make their money by arranging the borrowing for a company on the financial markets. For that, they are paid an income or fees.
Okay, so what about the building societies? What's their role? They sound like our savings banks in Germany.
Well, in the old days, building societies were basically savings and mortgage banks, which focused on the ordinary customer. But building societies, unlike banks, are mutuals, which means that the customers own the bank. Every customer who has an account becomes a member and owner of the society.
Interesting. So you are saying that the customers are really the owners of the building society. Is that right?
Yes.
Okay. But I see from your slide that there are other financial service companies like supermarkets. What do they do? How can a supermarket be a bank?
Well, that's a good question, but it's an obvious development. Supermarkets have a lot of cash, plus a large customer base who use their local retail shops every week. So, in the last 10 years, they have introduced financial services for individual customers.
What about other types of bank? I heard that the UK had internet banks, which don't have any branches, but offer banking services to individuals only on the net.
Yes, you're right, Carl. Internet banks have become bigger and bigger because it is so much cheaper for banks to manage services online. In fact, some of them have no branches to visit and only exist on the internet. These virtual banks may well be the future of banking.
Okay, so if I have got it right, there are about 6 different types of banks in the UK.
Yes, exactly.